If you trade options for income or you're thinking about it, this video could completely change how you look at what you trade. Today, I'm going to compare selling puts on NVDA, one of the most powerful AI companies in the world, versus selling puts on SPY, the S&P 500 index that everybody says is safe. I'm going to walk you through real trades using my platform, real premium and real risk. And I'm going to show you exactly which one pays more for the risk that you're taking. And if your goal is weekly income, not just being right about the stock market, this is a must-watch video. Because here's the key. I can collect roughly the same amount of premium on each trade, but one trade ties up almost 4 times the amount of capital. By the end of this video, you will understand why capital efficiency matters. And I'm going to show you at the end which one I personally prefer. Now, if you're new here, I'm Michelle. Welcome. I have been trading options for literally almost 30 years. And this channel is all about real income, not just theory. And just as important, walking through the mistakes that can blow up an account, especially around margin and risk management. Now, before we jump right in, I am super close to 5,000 subscribers, and I want to say thank you to all you guys here that watch my videos, comment, send me messages. I love that, and I appreciate you. If you're not subscribed and this video is helpful for you, please hit the subscribe button to push me over that 5K hurdle. It really helps the channel. Now, let's jump right in. All right, so I'm going to show you using my platform in Thinkorswim. Now we're going to start with a side-by-side comparison of NVIDIA versus SPY. And you'll see something right off the bat. They kind of move similarly. So this is a 1-year chart of NVIDIA on the left, and here's a 1-year chart of SPY on the right. And you'll see visually, okay, goes down, goes back up, etc. They look almost identical. Now, I'm going to show you what's in SPY. So I just looked up SPY, and here's the website for the company. And I'm going to go to the fact sheet. And this shows you a couple of things. Now, I don't want anybody to get bogged down in the details. I don't give fluff on my videos. I just give you what you need to be a successful trader and make income for yourself. So I want to show you that SPY's top holding is NVIDIA, as we can see here. Further, the top holdings in SPY, Microsoft, Apple, Amazon, Meta, Broadcom, they're all technology companies, and they're all correlated. So typically, one of these goes up, they're all going to go up. One of these goes down, they're all probably going to go down as well. So you're not as diversified as you think by just trading SPY. Now, a lot of traders default to selling puts on SPY because it feels safer. And at the same time, many traders avoid individual stocks like NVIDIA because they hear words like volatility or risk and they get nervous. But when you sell puts for income, the real question isn't just, is this safe? The real question is this: how much income am I generating relative to the capital that I'm committing on this trade? Because safety without efficiency can actually hold you back, especially if your goal is consistent weekly income. And that's why I want to walk through this step by step using my platform. Now let's start with NVIDIA. I'm going to look at a trade for next Friday for both stocks. So I'm looking at January 16th. Today, the date that I'm recording this video is January 7th. So this is about a week away. And I'm going to choose a strike price that has a delta of about 30 for each ticker. What that means is this: the delta is the statistical likelihood that the stock will close in the money when it expires on the expiration date. So for example, if I'm looking at a NVIDIA January 16th put, here's a 31 delta, and the strike price is $185. Right now, the stock is trading at 190.04, as we can see up here. So that means that it has approximately a 31% likelihood that the stock will close under 185 when the contract expires on January 16th. Now, this contract right now is currently paying 2.23, meaning if you sell a 185 put, you get $223 dropped into your account right away, and you're committing to purchase 100 shares if the stock drops below 185 before the contract expires. Now I'm going to go to SPY and find a similar contract. So here's a January 16th SPY, and here's a 29 delta, pretty close. So if you were to sell this $687 put that expires January 16th, $238 would get dropped into your account, and you're committing to purchase 100 shares of SPY if SPY drops below 687 when the contract expires on January 16th. Right now, SPY is trading at 693.48. Now let's talk about capital for a moment. If I'm selling the 185 put on NVDA, I'm committing $18,500 in capital to make this trade because I'm committing to buy 100 shares if the stock drops below $185. So 185 times 100 is 18,500. If I go to the SPY contract, I'm committing to buy 100 shares of SPY at $687 if the price drops below that value. That means I'm committing $68,700. That's almost 4 times the commitment with NVDA. And if we go back to the chart, they move pretty similarly. And if we look at the income, I made this handy spreadsheet here, and I'm going to walk through this in this video. NVDA, you're collecting $223. SPY, you're collecting slightly more, $238. However, you're using 3.5 times the amount of capital. If we calculate our rate of return that we're making on the trade, which you do dividing the premium that you're collecting into the capital required to make the trade, you're making about 1.2% on your money with the NVDA trade, and you're making far, far less, 0.35% on the SPY trade. The reason is you need a lot more capital to make that trade. And I want to walk through something else that's quite interesting. If we look at how far the stock has to drop in order to require you to purchase those shares, I just made a handy column here. If NVDA is trading at $190 per share and we're selling a 185 put, that means the stock has to drop about 2.65% in order for us to be required to buy those shares. If you compare that to SPY, which is trading at $693 right now, if we sell the 687 put, it only has to drop a little bit less than 1% in order to be required to buy those shares. Now, what does that mean in plain English? That means SPY has to fall far less than NVDA, requiring you to buy those shares. That's more risk. So we are making slightly more money with SPY, but negligibly. 238 instead of 223, and the risk is about 4 times as much. So you really can't just look at SPY and say, oh my gosh, SPY is this big, huge company that has $717 billion in it. This right here is the part that most traders don't actually ever walk through. They just choose a stock because they think they like it. They pick a strike price without really walking through the mathematics of it. And then if that stock goes down, they freak out, they roll their contract, lock in a loss, and they just panic. Now, these things don't take a lot to walk through, but anytime something is new to you, it's going to be confusing at the beginning. When you're trading, you're using real money. And the fact is that all stocks go up and they also go down. So you have to walk through these steps that I'm showing you here in this video and other videos on my channel in order to help you be successful and create income for yourself every single week. If you want a copy of this spreadsheet, drop a comment below and I'll be happy to get you one. So how'd you guys like that content, huh? Is that helpful? Can you totally see yourself doing this? Listen, once you learn the basic concepts, it's literally like 15 minutes per day that you spend on this. And then you spend the whole rest of your day doing stuff that you want to do. Take control of your life, create income for yourself, and have the life that you want. It's easier than you think it is. Make sure you're subscribed to the channel, smash the like button if you liked the video, drop a comment below, and let me know, would you rather tie up like 18,000 in a trade to make 250 bucks, or would you rather tie up almost 70,000 to make roughly the same amount of money? For those of you who want more help walking through trades, I'm planning a new program and you're not going to want to miss the details. I also have a live event coming up tomorrow and I'll post the details here as well. Anyway, thanks for watching and happy trading.